Welcome to our first episode of Ask Breakout Investors Anything. You can email your questions to askmeanything@breakoutinvestors.com. We are going to see how popular this is and how many questions we are getting, and also how many of you are going to listen to this or check out the notes or transcript, and then we can see if we're going to continue this. So we have received a number of questions already. I'm mostly going to answer them. There are a few that are addressed specifically to other breakout investors, and those guys will answer separately. So first, to my part, I'm Florian Buschek, and we have the first question from our own Chris Forte. He asks, how do you balance your day job, investing, and living the adventurous life you lead? That is a very good question. I don't sleep a lot. I have a very strong work ethic, I would say. I don't do a lot of non-productive stuff. I don't drink. I don't go out for parties or anything like that. And yeah, I don't sleep all that much. I probably should sleep more. And yeah, it's always a little bit of prioritizing things. And one thing you will probably often notice is I don't do a lot of things anymore that are, let's say, details, but not necessary for the big picture. So, for example, it has become very rare that I'm building a full financial model for any of my picks because most of the time I'm just doing the math in my head or just do some very rough numbers to sort of guide me towards the big picture, to see what sort of operating leverage is in the business and what growth rates could be appropriate, what is going to drop to the bottom line. A lot of those things can just be roughly right, and that is enough for making investment decisions, at least for me. Obviously, it would be better to have a full model, but that takes time, and that goes back to how do you balance everything. If I were a full-time investor, there are a number of things I would do differently, but other than that, I have to prioritize. And then the other thing I would say, which I think is very important, the adventurous life that Chris is referring to is obviously when I'm going on hikes. And that is time that can very well also be spent thinking. A lot of our job as investors is not sitting down and consuming information. A lot of it is also thinking about companies, business models, digesting information that we have read about, right? And a lot of that can be done on a very calm hike as well. So that's on this question. Our next one is from Hayes Sandburn. Hello, what online tools do you use for reviewing financials? That's his first one. I would say there are a number of tools that help me quite a lot. I used a lot of Seeking Alpha. I don't anymore because it has become a very big pain if you're not a paying subscriber. I also don't use Ticker as much anymore. It just seems a little bit slow to me, and also if you're not paying, there's a lot of stuff missing, but I would still recommend Ticker. My two tools that I'm using almost every day are CapEdge and finchat.io. For them, you get a lot for free. For CapEdge, you can build your watch list out of companies, and then you get news items, filings, etc. every day, and you can look at financials, some metrics. You can see a lot of transcripts. You can open SEC filings, news releases, etc. Similar for FinChat. I think FinChat is much better if you just check out numbers, ratios, and so on. And also transcripts are maybe a little bit more reliable than CapEdge. But sometimes they also have transcripts of not necessarily quarterly calls, but like presentations, things like that. And it's very, very fast. So all that is for free. Obviously, you can pay for it as well and get some additional benefits, but those are my two go-to tools. I would also highlight BAM SEC. You can, in the free version, it's a convenient way for me to check SEC filings. In the paid version, you also have access to, I think, any filings going back further than a couple of quarters. You have insider transactions. You have much more transcripts. There's a lot, I think, benefits if you are willing to pay. I am not a paying subscriber. I just use the free version. It's just convenient for me. The last one I would like to highlight, and I've talked about that before, is CEO.ca. It's actually a forum for Canadian companies, so I exclusively use it for Canadian ones. And I'm not really using the forum aspect, but it's very convenient if you log in for free to pull filings from Canadian companies. You can read news releases, you can see insider transactions, you can see the short history, things like that. And you can build watch lists as well. So for Canadian companies, that is my go-to site. Hayes also asks, what is your process strategy when preparing for calls with management? Are there tells you determine if they are high quality or honest versus just telling you what you want to hear? That's difficult to answer. I would say this, there are a number of CEOs I've been talking to where I know immediately the things the CEO is saying, he has not said the first time. Like, this is his standard sort of speech and what he's telling to a lot of interested investors. And that doesn't need to be a bad thing. It just shows you that this is not their first rodeo and they are prepared. But it may be a little bit more difficult to rely on them saying their true opinion and as you say, tell me what I want to hear. Ultimately, I think you just have to ask the right questions, and be prepared to obviously hear a little bit of a rose-colored story from management. Obviously, no manager will tell you, oh, my business is terrible, don't invest. But I will say most of the time I had a good experience from talking to them. And if it's just to learn how they think, what their sort of character is, just a little bit more details about how they think about the business, especially for microcaps, I have found that very, very helpful. But of course, do not only rely on what a CEO tells you. Never. You always have to look for confirming evidence. You always have to check if it's really correct and if it's really representative what they have been saying. And you also have to follow up. And yeah, there are a lot of things to pay attention to. but overall, I think it's beneficial to especially investing in microcaps, in particular because there's just not our picks. There's not a lot of analysts, right? You can't usually find a lot of other research, and sometimes you just don't need, you just find a new company and you don't really know, okay, what does the CEO actually think? Like, what are his plans or her plans? Where is this going? And for those kinds of things, I think talking to management is very, very helpful. And and there are also, I would say, a few phrases where when I'm hearing them, it's a confirmation for me that this person is thinking the right way about the business. For example, I had people tell me, oh, they want to grow, and because they want to grow, they need to raise money, and regardless of price or buybacks, no, we don't do buybacks because blah blah blah. And that is sometimes, that can tell me that this person doesn't have a good concept of cost of capital, just as one example. And yeah, there are a few such things I am paying close attention to. And yeah, I think that's it for this question. We have one from Max Häge. We have actually several from him, but his first one: before deciding on whether a pick gets official, is there a process to discuss or reconcile this potential pick among the BIs, or are all BIs completely independent in this regard? Yes, we are all completely independent, so I will certainly not dissuade Aaron from picking XYZ new stock, nor the other way around. Sometimes we will discuss picks before talking about them, other times not so much. I think it also depends a bit on what kind of pick it is. I have made like smaller, more like trade picks, for example, Silicom, right, or Racom, where it would never be a large position. It's just, okay, this is interesting. I think the stock is going to do well. It's a nice diversification, or it's trading below cash, or what have you. It's just no need to talk to a lot of other people about it before. But for other companies, there's a lot more collaboration before we actually go out and make it a pick. Snip was that case, for example, or Locify. And so it really depends, but there's no formal process. And yes, we are independent completely. The next question from Max is there a process and a criteria how to become a BI? There is no process. We certainly do have some soft criteria, but it's always a very individual decision. And yeah, this is not a good answer, unfortunately, but no, we don't have a formal process. But we, of course, pay attention to the work that people do. And yeah, if we notice that somebody is doing a lot of very good work and is contributing to the community, we will obviously pay attention very, very quickly. Number 2, Florian, what are your favorite hiking routes? It depends if it's summer or winter. In winter, it's very, very different, of course. I'm not going that high altitudes. I have generally trouble recommending a very specific one. I think it might be better to talk about areas. So I am very, very keen on hiking at the border between Austria and Germany, or in sometimes also more in Austria than in Germany, just because you're getting closer into the Alps. and into the real nice mountains. Otherwise, it's very hard to pick a specific one. And with that, we come to Michael Slonim. Thanks in advance. Feel free to pick and choose. Some of these as there's too many. How do you screen your ideas? I think I can pretty much talk for every one of us. We don't really use any formal screeners. I think I probably should do it, but that goes back to how do you balance life and work and so on. Honestly, we have a lot of sources. In particular, Aaron has very, very good sources who bring picks to him. I am personally reading quite a lot on Substack, and I have my, for example, or blogs, I have my eyes and ears very wide open always for new ideas. A lot of us have gotten picks from Twitter as well. But yeah, it's a bit more random than I would like, but I think that is sort of inherent in investing, quite honestly. His next question is, with Twitter, Substack newsletters and personal screens, it's easy to get inundated with 100 seemingly good ideas in a week. How do you block out the noise and remain in your positions as opposed to selling and jumping to the next best thing? Yeah, it is a constant struggle. My bar is very high to sell a high conviction position, just because I find something new. I am rarely in a position where I have excess cash, and if I do, I am much quicker to at least initiate a small position and do more work. But if I'm fully invested, again, the bar is very, very high. And I really, really need to like a company quite a lot to sell one of my higher conviction picks. It also gets obviously to the topic of timing, and I would certainly not claim that I have figured that out, and probably nobody else. Yeah, it's I think you have to have a very high bar for any new pick to sort of enter your universe. And also for me personally, I always ask myself, do I even want to learn more about this business? Because if the business model just doesn't interest me, or the industry or the sector, I'm just not going to do the research that is necessary. And so it's not a pick for me. Period. It might be the best stock in the world, but if I'm not willing or able to research it properly, then it's just not for me. Sometimes there are trades, of course, and that is, I think, a very different topic. But yeah, I think in our world today, you need a very good filter, and you also need to watch closely your sources. Like, I have a few people, and when they tell me, hey, look at this stock, this is a high conviction pick for me, please give me your feedback. Obviously, I'm paying attention very quickly, but if I'm just seeing a random account on Twitter, oh, look at XYZ, well, yeah, maybe at some point, but it's far down on the list. I think you get the point. Question number 3 from Michael. How quick in researching a name do you buy? Is it a thorough vetting before buying a full position? Yeah, I touched on that already a little bit. Buying a small position happens relatively quickly for me if the first things I see I like, and if I have some cash available, or other names in the portfolio where I'm losing confidence, or I wanted to take profits anyways. And buying a full position, that depends on what you think of as a full position. I don't have a strict definition of it for me personally, but yeah, a lot of research needs to be done for me to buy a stock up to a substantial part of my portfolio. But it also depends on liquidity, right? If it's a very liquid stock and I can buy today, and if I change my mind tomorrow, I can easily sell, yeah, then I'm quicker to build even a large position. But if it's a very illiquid one, like a SNP, for example, then a lot more research needs to go in to go heavy. That's, I think, very, very clear. Next question. Similarly, are you constantly buying dips, selling rips, or just buy, hold? That depends a little bit on the company, and it depends on your own character, I think. I for very high conviction long-term picks, I am rarely trading at all. For example, I don't trade Locify much, except when like there's a big spike, right? It happened 2 times, and then I sold a lot or almost everything and bought my position back over the next weeks each time. But otherwise, like if something like Locify, which is a high conviction pick, is up or down 10%, I don't even mind. And it also comes back to liquidity, right? You always have to consider, yeah, if the bid-ask spread is 10% wide, well, if the stock is up 10%, why would you take profits? Because if you want to buy it back, there's no chance you can even get back on within a reasonable percentage, and ultimately it doesn't make much sense. Now for highly liquid names, yeah, I sometimes do take profits, but I'm in general not the one who, as you formulated, buys dips and sells rips. I have conviction in a company, and then I'm willing to hold, or I am losing conviction, or I'm not that sure anymore about the upside, and then I will sell quite a lot and rather quickly. Or if something really, really good shows up on my radar and I think I need to buy that now, and then I'm also quick to, yeah, not quick, but then I would also sell, but not sell other names, but not necessarily sell rips. How patient are you on the bad quarter? I guess it depends on how bad. Yes, that's exactly. It depends on how bad. It depends on what my expectations were going into the quarter. And it's very hard to generalize because a quarter might be bad, but I might know that or anticipate that the next quarter might be fantastic, and then it doesn't really make sense to sell. Like SNP is a good example. I don't expect Q2 to be particularly good, not particularly bad either, probably just like Q1, but Q3 is going to be massive. So am I going to sell in anticipation of a bad Q2 or after a bad Q2? No, absolutely not. If anything, it's a buying opportunity. I think a difference is if a quarter is bad in the sense of the business goes fundamentally in a different direction than I would have thought. If long-term guidance is removed or something like that, or if it's something really serious. But just because a bad quarter, because some expenses were up or there were some timing issues, anything like that, I don't think that is a reason to buy or sell. You may be able to play sentiment, but that is very hard. Next one, Joshua Priest. Do breakout investors err on the side of being too early? As we've seen with SNP, Locify, XCLB, and others, often the market punishes the stock for staying in wait time. How can subscribers better factor in the risk of being too early? Should we take very small positions until the company proves itself with announced deals, revenue, or profit? Yes, I think that is a very good idea, to take smaller positions in the beginning, and as the company executes, you buy more. I think that is, in general, a very good and well-known strategy. It would have saved me a lot of trouble, probably. It would have also prevented me from participating in some very big wins. Locify, for example. Pessy maybe as well, because the business deteriorated and deteriorated, and all of a sudden the stock was more than 3x when the information we knew all along about Hanford came into light. So it's a very difficult topic to generalize for me. But yes, absolutely, mea culpa for Snip and Locify. I was certainly too early. I would say this: there is also, I think, one of the issues, or one of the errors I have made with Snip is I underestimated how much revenue, how much the bottom line would suffer for a while, and how long it would actually take to turn the business from being profitable to losing money to being profitable again, and to reverse the top line decline from the loss of this one Gambit contract. And that's what happened in the past couple of quarters, right? And obviously the business momentum got totally killed by that, or at least what you see in the numbers. And I certainly have underestimated how long that would take, and also the impact it would have on the market's perception. Yeah, it is, again, it is hard to generalize. Also with Locify, I was pounding the table pretty hard because there was one specific deal I was waiting for, and if that had worked out as I thought it would, then we wouldn't be sitting here in with a single digit stock price. It would be an order of magnitude higher. Now, of course, it didn't work out, and that's why the stock is where it is, but you see where this goes, right? So it's always a game of probabilities, and yeah, it's a difficult topic. Ultimately, I think you have to make your own decision. Ultimately, you have to factor in that none of us are right all the time. It's great if you're right more than 50% of the time, because that is certainly one observation I would make about a lot of my picks. A lot of them have tremendous upside, and if they work out in multiples. And when they don't work out, then you have this continuous decline in the stock and it being sold off. But there only need to be a few of them to really work well, and then you can make a tremendous return. That's certainly something I have seen. I am trying to get that a little bit smoother, but yeah, very valid observation. And yeah, ultimately it's also, I think it's in general a good idea to have enough of a stock, if you like the research and if you're convinced of it, for you to be happy if the stock goes up because you participate well in the upside, but also have the position small enough that you would be willing to add. I think that is in general a very good spot to be. The next question from Miles. Hey guys, thanks for doing this. Traveling for work and now it's not yet expected. Perfect course. Don't know that I can join live, but I would love to get some takes on the following. So this is not live, right? This is recorded. And now it's a question. How do you determine initial position sizing and how frequently do you make adjustments? I understand Mark's methodology, but would like to know how others approach it. I don't have a good recipe, quite honestly. I've already said that I always start small, and if something is really hitting me hard, like it was the case for Locify in the beginning, and Pessy as well, then I will buy a lot more. But very often, which goes back to the question I just answered, very often I will buy a position, maybe even a big position, and the stock will continue to decline. And if I am staying convinced of my research, then I'm also willing to add and make it an even larger position, which has its drawbacks, this method. But yeah, initial position sizing, very hard. A lot depends on how much research I have done, how much the upside is, how good I know the company, I know how much conviction I have, things like that. And sometimes it's really difficult to say. And yeah, how frequently do you make adjustments? It depends on the factors I already mentioned, right? Do I find other picks I really like? Has the stock moved? Is the upside still intact? Do I lose confidence? And so on and so forth. But I rarely trade much just because it's up a few percentage or down a few percentage. Next question from Miles. Obviously varies from stock to stock, but any sense of the average expected hold time to realize a thesis play out when you enter a position? Yeah, I am in general buying with the intention of holding for quite a long time. Certainly many months, even years. But of course, it's always better if a thesis plays out quicker than anticipated. Historically, I haven't had a lot of stocks that simply went up slowly over time. Those are obviously very, very easy to hold. You also don't want to be too early, which, yeah, often I am, but very often I am holding for the long term, especially for my major picks. But on the other hand, if a thesis plays out quickly, or if the stock takes away so much from future upside, prices in so much from future upside very quickly, then I am willing to sell much earlier as well. But it's very rare that I enter positions with the expectation of selling very quickly again, other than a few trades that I do here and there. And when I talk about those, I make it very clear that this is only a short-term thing, something like merger arbitrage or special situations, etc., etc. Next question from Miles. Would love to hear the current favorite near-term 6-month opportunity and why from those participating. All appropriate caveats apply. I would say it depends if you're only in for the upside or if it's more a risk-reward question. I would just say my two largest positions at the moment are Locify and Intermap. Those are the largest by far, and that should give you a sense of where I think the opportunity also in the short term is the greatest. In particular for Locify, I would say after the spike, they have more cash now than before. Because of using the ATM, obviously. So running out of money is not even a question anymore. The business momentum is turning around. The stock is still beaten down again historically, but has stabilized at a remarkably high level. And I think with the business turnaround and the numbers that should soon be announced, I'm confident that the stock react very beneficially on that. And the other thing is, I know they're working on a bunch of things, and several of them also very, very, very big, which I think if they work out, then the upside is by far the biggest, also in the short term, of any other of my picks. And that's why it's my number one. Um, yeah, there are, at the moment, I will say it's very hard to pick favorites because we follow a lot of stocks right now that are extremely attractive. This is, to me, it's a very good investing environment. And those were the questions from Miles. We have one from Peter Cousins. ASPI Isotopes. The company is in wait time but has customers once they start producing, which is my understanding they expect to start ramping this year. When do you expect the stock might start climbing again? Well, the stock has been climbing again already. Beyond that, honestly, I am not in a position that I can comment any further. I just haven't done enough research to give a qualified opinion. I own the stock. It's a very small position, but there's a lot of discussion going on in the community. And yeah, I am long, but I have not done enough. I have done enough research to say I really like the story, but I'm not confident, uh, at least in the sort of short term to medium term. Long term, the story seems really good, but I certainly by far have not done enough research to comment in more detail or to make a large position for that matter. He also asked about Intermap. I was a big loser in this stock in the past. I understand that this contract has already started. I think he's referring to the Indonesian contract. Started paying, which is different from the situation several years ago. What do you think is the quality of management and sales team? Can they execute? I can't comment much about the sales team. I think the quality of the CEO is absolutely top notch. I wouldn't say he is one of my most favorite CEOs, but he is certainly one of the most qualified I know. The impression I got from talking to him and what he has already accomplished in the few years he is CEO is nothing short of astounding. He has completely turned the company around. He set everything in place for the success we are now witnessing. And I think he does a tremendous job. When we talked to him, he said a lot of the right things I want to hear, which goes back to one of the questions we had previously. What do you pay attention to when talking to management? Like, he's focusing on efficiency, he's focusing on only developing products where he sees demand and not just develop into the blue. He has a very good grasp on how to approach customers, how to get the highest return on the company's money. And I mean, there's just a lot of things where I could not have agreed more with what he said. And he did a tremendous job turning everything around. I think the company is in very good hands. Obviously, he is also a very big shareholder himself, so the interests are aligned, very much so. And yeah, as you wrote, Peter, Indonesia has already started paying. It's not even a question anymore if this contract is real. The question is, will they get the other 90% of Indonesia to map? And my confidence in that is pretty high. The two hurdles to overcome are World Bank funding, which we will know in September, and then of course they have to be formally awarded. Considering that they have literally written the specifications for this whole project, I think the likelihood is extremely high, certainly more than 90%, that Intermap is getting it if the World Bank funding comes through. But from everything I have seen and read and the evidence I was able to find, I think that is also very, very likely. And beyond the Indonesian contract, I mean, we just had this announcement with the US Air Force. We have seen a lot of other announcements with business wins from insurance and so on and so forth. So, and that's also a point that the CEO has made, which is he doesn't have to rely on the Indonesian contract. His business would be fine even without. And that is another one of the reasons why Intermap is a top position for me, my number two. Not only is the upside extremely high if they win the other 90% of Indonesia, but also it's at this price with the cash they have, with the management in place and the business momentum. To me, it's a very safe pick. Last question from Matt S. Hi Florian, what are the top names held by Breakout investors, members that you know, and or can you poll that again? What names that you don't own are you keen to investigate further? Yeah, I have named my top two names as well. I have named my top two names already. I just talked about Locify and Intermap. There are a number of other names. I would probably refer you to our power rankings where you can see that very well. I cannot really speak to the other Breakout investors. We will get some comments from them. But I have said this already, I think the environment to pick small and micro caps is fantastic at the moment. We have a very big set of opportunities. I think the list is too long of things that are on my list to research, but I don't own. A few things I do own are, of course, Snip, Locify, Intermap. I would highlight Quia Silver. I think that is very much underappreciated. Obviously, it's a silver mining company, but I have a hard time seeing if they don't even execute well, just execute so-so, how the stock is not tremendously undervalued. Yeah, there are quite a lot of names that are really interesting at the moment. And yeah, without going into further details, because you can learn a lot more about all of our picks on the platform, in our chat room, in our elite calls, and of course in our power rankings. And with that, we have reached the end of the questions. So I hope you found my answers helpful, and keep them coming. Again, questions go to askmeanything@breakoutinvestors.com. So thank you for listening, and see you next time.
Some or all the speakers may maintain positions in the securities discussed in this podcast. The views in this podcast expressed are those of the speakers, not Breakout investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Neither Breakout investors nor any of its affiliates makes any representation or warranty, express or implied, as to the accuracy or completeness of the statements or any information presented by this podcast and any liability, including in respect of direct, indirect, or consequential loss or damage, therefore is expressly disclaimed. No one on this podcast is an investment advisor, and no one is providing investment advice. Before investing in any company's stock, you must do your own research. Thank you for listening.